Hey everyone, welcome back to another Bullish Bears YouTube video. In today's video, we are preparing for the futures. And when I say that, I mean we're preparing for this week in futures trading. So we're going to be looking at the ES, the Nasdaq, gold, and crude oil. We're going to go over some key levels, some areas I'm going to be watching to either go long or short, or some key levels that I would like to see either hold or break to give me an idea of direction of the market. So let's get into it. First, we're going to take a look at the S&P 500, that is the ES. So as we see, we had a very strong rally coming into some new all-time highs. This rally came once we had the elections, the results, and we saw that Trump was going to become our next president. The market reacted very bullish to this information. From the elections to the top of the rally, we are currently rejecting the 50% mark. So, right, we retrace to our 50% retracement. What I'm going to be doing this coming week is I'm going to look to see if we could continue back lower for Monday and Tuesday, possibly Wednesday, but look for a turnaround later in the week to see if buyers want to step back in and push us back to the upside. Now that we were able to look at the higher time frame being the daily, we can now break it down to the 6 hour, 4 hour, 2, 1, and then the 30-minute and 15-minute. So what I see on the 6 hour time frame is I see that we held a demand zone down here that was created on October 7th. We held that when we came into it and when we had those elections. So that's sort of the base where we started our rally. Other than that, I don't see much demand underneath us on these higher time frames on the 6 hour. As you see, I do have a 1 hour plotted over here near this key level around 58.75. But other than that, if we can break below this demand zone, I would really like to see if we can retrace, maybe even back to this point of consolidation before we had the election rallies. Now we're taking a look at the 2 hour time frame, and again, I'm not really seeing much demand underneath us as of this recent price action. We do have this hourly demand zone that we see right here on the 1 hour. We have our basing time frame. We have a strong impulse move and continuation. And because of that, when we retested the zone, buyers came in and we were able to push up a little higher, closing the day still red on the day, but we weren't closing below this demand zone. So until this zone breaks, this zone is still valid in my opinion, so I will look to see if we can hold above and stay within this range. The levels you see, the blue levels, are key psychological levels. You'll see they're all placed at areas like 6,000, 5950, 5900, 5875, and 5825. And as you see when we look at the chart, price does react very well to these key psychological levels. So that's why I'm going to be using these and keeping an eye on these, because we are also at all-time highs, which makes it a bit more difficult to find levels of support and resistance because we don't have much historical data to go off of. So overall on the ES, there are a few scenarios that I'm going to be looking out for. I would like to see either a break back below this demand zone, just like we've been breaking demand zones on this move lower, a break below this demand zone, and a retest of this 58.75 area to go short, targeting the next key psychological level, maybe around 58.25. I would possibly even look for if we can hold above this demand zone for a while, but fail that rally, fail this previous pivot high here, and come down and fail that demand zone. Again, we'll be looking for a retest to go short if I haven't already gone short off the failed pivot high here. Or if buyers do really want to step in, I would really like to see if we can possibly sweep the low we created in this demand zone while still holding demand and look for long positions, maybe even possibly look to see if the Nasdaq is creating some sort of divergence. Now, if we do fall and go below these demand zones, what I'll be looking for is a higher time frame to create a new demand zone to then confirm we're reversing back higher. If I don't get a time frame reversing back higher on the higher time frame, like the hourly and up, then I will not be taking any long positions as long as we're below this demand zone right here. Now, the Nasdaq is giving us very similar price action on the higher time frame as the ES S&P 500 is, which is very common. So something I'm going to be looking for on the Nasdaq is a bit of a stronger drop. Now, the reason for that is because if we're looking at the rally we created after the election, we're already at the 61%. We're almost even close to that 78% on our Fibonacci retracement, whereas on the ES we saw that we were only at the 50%. Now, something I also want to point out is that the Nasdaq has a daily demand zone resting around the 20,138 level. This is where the consolidation point was before we had the election, before we had the rally. So if we do make a full reversal back to that consolidation period and consolidation point, this would be where I see us basing out and continuing back higher. Right now we have to think this is a very strong selling pressure, just like this is a very strong buying pressure. We've been creating higher highs, we've been creating higher lows, the market has been bullish, we just created all-time highs on ES and the NQ again. So even though we had a very strong week to the downside last week, we have to remember that at first sellers were failing, buyers were still present. We did end up failing, we pulled back, but a pullback in the market is always healthy, right? When we pull back, just like I mentioned earlier about historical levels, now when we pull back, we're given new historical levels and supply and demand zones to base our trades off of. So now let's look at the lower time frame and see if we could work on some trade setups for this week on the Nasdaq. On the Nasdaq, we're given very similar price action to the ES in the sense that below this 1 hour demand zone, which this price action looks extremely similar to the ES. If you missed that, make sure you rewind and go check that out. But it gave us a long lower wick, a small basing candle, and then it gave us the move with some continuation. It was a lot stronger on ES, but it did still give us the same zone on the Nasdaq. Now this zone did work as an area where price started to slow down. We broke it and we did end up reversing back into it. Normally when I see us break a supply or demand zone and then reverse back and continue anyways, even though the zone was broken, I would like to see that price action happen on that same day that it was broken. If it breaks and we fail to close back above it again, I would still sort of like to consider this zone broken or dismissed and delete it. However, because we really don't have that many zones or areas of interest, I'm going to be keeping this 1 hour demand zone. It is quite the wide zone as well. It is from 457 to 596, so about 140 point zone on the Nasdaq. Obviously, we're not trading with 140 point stop loss, so what I'm going to be doing is I'm going to be using the top and bottom as key levels. So instead of using the full 100 and something points, I'm going to use key level 20,457 and key level 20,596. And if I'm looking to go long over here, I'll maybe put my stop loss at a recent pivot that's a bit lower inside demand. Or if I'm going short somewhere below the key level, I'll keep my stop loss at a recent lower high that we created in this broken demand. So again, same price action as well with if we break below and we stay below this, I might even look to see if we could stay below this 20,400 key psychological level. If we can break below that, I'll be looking for shorts on the Nasdaq, looking to target that daily demand zone around 20,138. So that's sort of my idea and my thesis on the Nasdaq. Make sure you guys keep up with us. Join us at bullishbears.com to join our community. We live trade every day for our community and our members. And I'm going to be going over gold and crude now, so make sure you stick around. Now, taking a look at something like crude oil, crude is in a more defined range, way more of a range bound than ES and NQ, and even gold, because gold was also at some all-time highs, even as of this past month. So something I'm looking for on crude is for it to always just sort of continue following this type of trend, looking for recent highs to be broken and rejected, looking for old gaps to work as support or resistance, and supply and demand, of course, to help me find the tops and bottoms of our ranges. Now, I do see we have a little bit of a basing candle here on the daily, and we had to push higher. This did work as the bottom of our range for the price action we had this past week, although Friday we did finally have a stronger break below. Now, we didn't get below the zone exactly, so something I'm going to be looking for this coming week, especially even Monday's price action for the next daily candle we get, is I'm going to see if we can break this previous day's low and then come back up and retest within this demand zone. If I could get some type of retest in this demand zone, and if some type of imbalance also forms, maybe a 15-minute, 30-minute, or an hourly, or even some type of new supply and demand zone, which would be a supply zone in this zone because I'm looking for a short, then I'm going to take that zone with confidence because we already broke previous day low and look for continuation and take that trade with higher probability. Now we can look into some lower time frames on crude to really see if it has given us that entry yet. So now we're looking at the 4-hour time frame on crude oil, and again, the first thing I see, and it's an easy notice, is it's very range bound. We were range bound between 70 and 72.50. We broke below that range. Now it seems like we're range bound between 69.50 down to about 66, 67 area. What I would like to see, as I mentioned before, on the daily time frame pushing lower, I'd like to see us break that pre-market and that previous day low before the market opens in New York Stock Exchange tomorrow. And I would really like to see us pull back into this previous daily range and reject this 4-hour supply zone. So I'd like a rejection of this 4-hour supply zone. As we see on the 30-minute, we already rejected this 30-minute supply zone to give us a double top and then a strong move lower, giving us the higher time frame 4-hour supply. So this is where I would look to short the crude oil. As we see, if we look left, this is a point of consolidation. So it would almost be like this was the breakout of the range. This is the retest of the range to take it for one more leg down. So that's my thoughts on crude oil going into next week. Now, gold has had a bit of the opposite reaction from ES and NQ after the elections, where it gave us a very strong move lower. Since elections, gold is down about 6, almost 7% from the election. So that's a pretty big pullback, very strong move to the downside. And just before we had the election, gold was creating all-time highs. So it was very bullish on gold. This was a very strong pullback. It's curious, where's price going to go? Are we going to continue lower? Was this a pullback before the final rally? The market does need to pull back, it does need to grab liquidity, and as we know, the market does like to look good in one direction before finally reversing back to the other. So something I would like to mention on gold, just like ES and NQ, is year to date, we are very bullish still. So something I would definitely keep an eye on gold is to see if we could hold up this demand zone around 25.45. Very strong. If by chance we do break below 25.29, I would like to see a strong break and a hold below this zone. If we can't break, hold, and or close below this zone, I will still be bullish. It'll be hard for me to remain bearish. Right now we have one wick coming out of this demand zone. We tried to rally yesterday but ended up giving us an inside candle. So that tells me that there's a lot of consolidation. There's a lot of uncertainty going on in gold right now. So as for gold, I don't really have a good trade setup right now. The only thing I'll potentially look for is to see if we can maybe take out this sell side liquidity sitting at the low of this candle before we want to push higher. So right now what I would look for is I would look to trade this range. If we break out to the upside around 25.85, maybe I'll look for a reversal back to the downside at demand, and vice versa, demand back up to the top of the range to a potential supply zone. So we'll go into the lower time frame real quick on gold, mark out some supply and demand, and that will be a wrap. Now, because gold has been very range bound the past two trading sessions, we're not going to get a higher time frame zone to trade off of. The last time we got a strong move to the downside was Wednesday, and that gave us a 3-hour supply zone right here. We have our basing, we have our upper wick, we have our strong move lower, and we have good continuation. So I'd look to see if 26.14 might hold up as an area that I might look to take short on gold. If we do look for these shorts on gold, I would probably look for key level 2600 even to be my first TP. And again, we will have to see how price reacts to these levels. Same with demand, like I said before, I would like to see if we could sweep demand, or at least sweep this level and hold demand for a move higher. Alright guys, I hope this video helped. This is our breaking down the futures, preparing for the futures. I'm Bullish Bears Kevin. Take care, happy trading, and I'll see you guys in the community. Peace out.